Welcome back. You're still tuned into Trading Hour on CNBC-TV18. For the equities, it's looking just fine, around 125 points in the green. It's a good-looking screen. The Nifty Bank is up 0.7%, and the mid-cap index is really outperforming today, seeing gains of over 1%. But let's talk about the commodity space as promised. Manisha is joining us, and today she's looking at iron ore. Manisha.
Well, thank you for that. I'm looking at iron ore because we have seen a sharp crack in overnight markets, and we're trading at a 2-month lows in the international markets when it comes to the iron ore prices there. Iron ore prices also have been declining in the recent few sessions there. We did see prices gain up in the last week or 10 days, and that is because the markets were looking at higher production coming in. The Chinese restocking is something that the street was also watching out for. And then Vale also in its production guidance for this year has said that they are looking at production cuts. They already have seen 6.5% of a cut in the first half of this year. That is a report coming out from World Steel Association. That is the global output that we've seen. In any case, there have been suggestions that 2021 was a lower out production as compared to 2020. And this year is expected to be lesser than 2021 as well. And that could be one of the supportive factors there. This is the output that we are expecting in this year. This is a Fitch report which expects higher output in case of iron ore at 3,195 million tons as compared to the previous year. When you look at the kind of export and the prices that we've seen in this space as well, something tells you that the markets are looking at a weaker trend. 8% of a decline in this year until now, and this is on a build-up of 28% decline in the previous year as well. Clearly, 2020 did see 70% of gains. We did see an all-time high in case of iron ore prices in 2021, but the closing was much on the weaker side. This is the view that various banks and brokerages have for this year and the next as well. ING, for one, expects the iron ore prices to average at around $105 per ton. If you look at other banks and brokerages, Australia Industrial Minister, for one, feels that 110 could be an average this year, but by next year, they're expecting the iron ore prices to decline quite sharply, and $80 per barrel is an average that they are working with. Fitch and ANZ also expect the average to at around $130 per ton, but they also expect the prices to decline further in the next year, anywhere between 107 to 110. And also, when you look at 2025, 2030 kind of expectations in sense of price forecast, they are much lower at $80 to $50 a ton as well for the iron ore prices. So looks like that the peak is done for this commodity in last couple of years, and from here on, it's going to be consolidation, even some declines.
Manisha, thank you very much for that. Back to the equity market. Sun Pharma is on our radar. It continues to be on the US FDA's radar. The drug regulator recently issued 6 observations to Sun Pharma's Mohali unit. Also note that the company's Halol unit continues to be classified as official action indicator.